Hi, welcome back to the channel. In today's video, I want to talk about one of the most extraordinary stock market stories we've seen in years. SpaceX has finally arrived on the public markets and the shares have exploded. Depending on where you're looking, investors who receive shares at the IPO price could already be sitting on gains of around 50%. Now, whenever something like this happens, there are two immediate reactions. The first is excitement, the second is frustration. Excitement from people who managed to get in, frustration from everyone else asking exactly the same question. How do these opportunities always seem to go to somebody else? And that's really what today's video is all about, because SpaceX may simply be the first act. OpenAI appears to be heading towards the public listing, and Anthropic is right behind it. And when you add those three companies together, you're talking about businesses worth roughly $3.5 trillion. That's 3.5 trillion, everybody. That's larger than the entire economy of the United Kingdom, and perhaps even more remarkable is what these companies actually do. One of them builds rockets and satellites, one created ChatGPT, and one was founded by former OpenAI executives who thought that the AI industry was moving too quickly. Now, the reason this matters is not simply because these are large companies. It's because they're becoming so large that they have the potential to reshape stock markets, pension funds, and investment portfolios around the world. So today we're going to look at who benefited from the SpaceX IPO, whether ordinary investors ever had a realistic chance of participating, whether OpenAI and Anthropic could create another wave of instant fortunes, and whether all of this is the beginning of a new era or the latest technology bubble. But before we get into all of those details, could I ask anybody that hasn't subscribed yet to please hit that subscribe button? Really helps me with the algorithm and also puts a smile on my face. So let's get into the details. The first thing that struck me when looking at the SpaceX story is just how much the investing world has changed over the last 20 years. If we go back to the great technology companies of previous generations, most of them came to the stock market at relatively modest valuations. Microsoft listed when it was still a young software company. Amazon came to market when it was primarily selling books. Google floated at a price of around $23 billion. Facebook was valued at roughly $100 billion. Investors who bought those businesses after they'd listed had years of growth ahead of them. The stock market was where ordinary investors got the opportunity to participate in the journey. Today, things are quite different. Many of the fastest growing companies stay private for much longer. Instead of raising money from the public, they raise money from venture capital firms, sovereign wealth funds, pension funds, and institutional investors. They remain private while the valuation climbs from millions into billions and sometimes into hundreds of billions. Only after much of that growth has already occurred do they arrive on the public markets. That's why the SpaceX listing is such a big event. For years, it was one of the most valuable companies that ordinary investors couldn't own. People watched the rocket launches, they followed the contracts with NASA, they saw the development of Starlink, they listened to Elon Musk talking about colonizing Mars. Please. But unless you happened to be connected to private markets, there was no way to buy shares. Now, suddenly that barrier has disappeared, and judging by the market reaction, investors have been waiting a very long time for this moment. The fascinating part isn't simply that the shares have risen in value, it's who received those shares in the first place, because when most people hear that a stock has surged 50% in one day or a few days, they assume everybody had an equal opportunity to participate. Unfortunately, that's rarely how IPOs work. Before trading begins, large blocks of shares are typically allocated to institutional investors. Fund managers, asset managers, existing shareholders, strategic investors. Sometimes a percentage is reserved for retail investors. Sometimes the allocation is relatively small, and when demand is exceptionally high, investors often only receive a fraction of what they applied for. So whilst there will undoubtedly be retail investors celebrating today, there will also be millions of people wondering whether the real opportunity has already passed them by. And that takes us to the next chapter of this story, because SpaceX may not be the only giant heading for the stock market. The company attracting the most attention right now is OpenAI. Just a few years ago, hardly anybody had heard of it. Today, ChatGPT has become one of the most widely used software products on the planet. If you know any students, they all use it. Most businesses are now using ChatGPT or something like it. Programmers are using it. Writers are using it. Governments are using it. Whether you love artificial intelligence or hate it, it's impossible to ignore the impact it's already had. What's remarkable is the speed at which this has happened. Most revolutionary technologies take decades to reach mass adoption. AI has moved from curiosity to necessity in what feels like a blink of an eye. As a result, OpenAI's valuation has climbed to levels that would have seemed impossible just a few years ago. We're now talking about a company worth hundreds of billions of dollars and potentially approaching the $1 trillion mark. Just let that sink in for a moment. A business that started as a non-profit research organization is now being discussed alongside some of the largest companies in the world. Naturally, investors are asking the same question they asked about SpaceX. If OpenAI does list, will ordinary investors have the opportunity to buy shares at a sensible valuation? Or will the biggest gains once again belong to those who got access while the company was still private? We don't know the answer to that yet, but history suggests demand will be enormous. There's another factor also worth considering. Many investors look back at companies such as Amazon, Apple, Microsoft, and Nvidia and wish they had bought earlier. That creates a powerful fear of missing out, old FOMO. People don't want to be the ones who looked at the next technology revolution and walked away. As a result, if OpenAI comes to the markets, demand could be extraordinary from day one. Then we have Anthropic, perhaps not as famous as OpenAI, but increasingly regarded as one of the most important players in the artificial intelligence sector. Its Claude platform, which is similar to ChatGPT, has become one of the leading alternatives to chat. The company has attracted significant backing from major technology firms and has rapidly established itself as a serious competitor. What's particularly interesting about Anthropic is its origin story. The founders left OpenAI because they believed artificial intelligence development required a stronger focus on safety and long-term consequences. In other words, the company was created because its founders disagreed with the direction of the organization they helped build. Now, both companies are potentially heading towards valuations that would place them amongst the most valuable businesses on Earth. That's an extraordinary outcome, but it also highlights the sheer amount of money flowing into AI. Investors aren't simply betting on better chatbots, they're betting that artificial intelligence becomes as important as the internet itself. And if that happens, today's valuations may eventually look pretty reasonable. Of course, the opposite argument also exists. Critics point out that every major technology boom has been accompanied by extraordinary optimism. If you think about the railways back in the day, telecommunications businesses, the internet, cryptocurrency, electric vehicles, in each case, there were winners that justified the hype and others that failed to live up to expectations. The challenge is identifying which category these companies will ultimately fall into. What makes the current situation particularly unusual is the scale involved. We're not talking about companies listing at 10 billion or even 20 billion. We're discussing businesses potentially approaching $1 trillion before many retail investors have the opportunity to buy a single share. That's a fundamental shift in how wealth is created. The private markets are capturing more of the journey than ever before, and that's something investors need to pay attention to. There's another angle here that often gets overlooked. Even if you never buy a single share in SpaceX, OpenAI, or Anthropic directly, there's a very good chance you could end up owning them anyway. Once companies reach a certain size, they become candidates for major stock market indices, the Nasdaq, the S&P 500, global technology indices, and when that happens, index funds and ETFs are effectively forced buyers. If a company joins the index, the funds tracking that index need to purchase the shares. Pension funds then follow, retirement accounts follow, investment portfolios pile in, and before long, millions of people become investors whether they actively chose to or not. That's why these listings matter. This isn't simply a story about Silicon Valley entrepreneurs becoming wealthier. It's about companies becoming large enough to influence the broader financial system. And that brings us to the biggest question of all. Have ordinary investors already missed the boat? Or are we still in the early stages of something much bigger? Wall Street is clearly betting on the second outcome. The market is effectively saying that artificial intelligence will transform industries increase productivity, create new revenue streams, and fundamentally reshape the global economy. If that's true, then the winners could eventually become larger than they are today. If it's wrong, then investors may eventually discover they've paid far too much for future growth. At this stage, no one knows what outcome will prevail, but what we do know is that capital is flowing into AI at a pace we've never seen before. The old economy was built around oil, manufacturing, banking, and industrial production. The new economy appears to be built around data, software, artificial intelligence, and connectivity. SpaceX, OpenAI, and Anthropic sit right at the center of that transition. Whether they justify their valuations remains to be seen, but one thing is certain: the race to own the future has already begun, and the people who missed out on SpaceX will be watching very carefully to see whether OpenAI and Anthropic offer them a chance to join the party. So I'll keep you posted on any further news and developments, but hopefully you found today's video useful, informative, and most importantly, thought-provoking. If you've liked what I've said, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already. Thank you so much to everyone that supported me. If you bought me a coffee or sent me YouTube super thanks or signed up as a patron or a member, thank you so much for that support. Really does help to keep me focused and making as many videos as possible. Just want to mention that Joe Blogs Russia is now live. There's a link at the end of today's video. It'll take you over there. Please subscribe and watch some of those videos. And Joe and Naz, which is a bit of fun, a bit light-hearted, I think you're going to enjoy it, is also live. There's a link at the end of today's video for that. Please help us grow. We need more subscribers and more watch time, so please watch some of the videos. And